Hi, I'm Ernie Burns of Burns Estate Planning and Wealth Advisors.
Hey, my name's Tim Dahlberg, one of the financial advisors here at Burns.
Today we're making this coffee chat because I know a lot of you out there are skittish about this market, and you have every right to be. What's happening, why it's happening, and here's the big thing, Tim, what's going to happen in the future. So we're going to cover all of that today. Now, we're not taking sides on anything. We're just going to basically cover what's going on now. And then we're going to give you some suggestions of what you should be doing depending on your age and your risk tolerance. Might need the risk tolerance out a little bit. We don't know you, but we talk about the age process and where you should be looking at to invest in the future. So, Tim, right now, why is this market going down right now?
Well, I mean, one of the big things that why it's going down is uncertainty, right? We knew when he was getting elected that one of the big things that he was going to be talking about was tariffs. We knew it was kind of factored in. What we didn't know starting in February is what percentage is going to be for tariffs. We knew Mexico, Canada, China that were going to be in there. But as we went through February, he kept raising the tariffs. It's going to be 25%. It's going to be 50%. And then obviously what happened on April 2nd was Liberation Day. We knew that these were a lot higher than expected.
And it was blanketed.
Yeah, blanketed
across all countries. Mm-hmm. And now, to let you know exactly what we're talking about, tariffs is in taxes. So other countries have been taxing the United States for our imports. So therefore, when we're exporting our items to they're importing our items, okay? It's being taxed 10, 25, 50, 64% in China, 64%. So we import 80% of China's goods. We export 20% to China. Mm-hmm. When we export that, right now their tax is 64%. Trump didn't even do that. He basically said, that's just too aggressive. So the first tax he put out on China was 34%. They reacted with an additional tax of 34%. Trump said, okay, well, we just do it 50%. Now, over the weekend, it's just ridiculous. So over the weekend, several Fortune 500 companies came out and says, okay, well, we're not going to produce it. We're not buying from China anymore. And yes, that is a goal to bring more industry back to the U.S., but it's not the overall goal of the administration.
No, that's not. I mean, one of the things they want to do, right? We're trying to lower the cost of goods and services that we provide here in America. Make America more affordable again, right? Make America great again. I mean, one of the things that we found out through these tariffs is that there's a big trade imbalance, and there's a lot of factors that go into that. I think what's making it tough is we tariff these countries, right? 10%, 15%, whatever's coming in, but it's the retaliatory tariffs that are coming back that we don't know. And what happens is when you think about corporations, they have a business model. There are certain margins that they have on it. As these other countries impose these tariffs back, it really doesn't affect them as far as the corporations, U.S. corporations. How are they going to be going forward as far as what are they going to be raising capital expenditure? And that's kind of the forecast, and that's the unknown with the current administration, the current Trump tariffs.
And now over the weekend, several Fortune 500 companies, like I said they're not doing business in China right now.
That's right.
Okay, so they're going to stop doing business and stop their orders, which is billions of dollars of orders. Apple announced last night that they are going to move their distribution centers to India, and they're going to build a huge distribution manufacturing firm, in the U.S.
That's right.
It's a win-win. So it's what you've seen here is a lot of huge swings in the market the last 2 days, and that is because some was fake news, some was real news, but overall, it's getting negotiated. Several countries are negotiating with the U.S. right now, and they're lined up behind others. There's over 25 countries right now lined up to negotiate with the U.S., and they're doing it 24/7.
That's right. What do they say? 70 countries are now coming to the table and really sitting down. And that's it. That's really what we need. We need the countries to come in. I don't think anybody wants a trade war. Nobody wants to see what did we lose in market cap in the last 3 days, $9 trillion, which is unprecedented. Yeah. Nobody wants to see that.
And I got some interesting news that I'm going to share with you. Let me just do it now. Let's see here. So I'm going to look at what the returns have been when the market has a swing as it's been. So we go back from 1950 all the way to 1950, 10% drops in 2 days. In 1987 again, 2008 twice, and then 2020, now we have 25. 1 month later, it started in 87 at 8.1% gain, 3.7, then 0.5%, then 15.8, and then last in 2011. Let's go out to 6 months. Start in 1950, 14.7, then 8.1, then 0.5% in 8, and then in 2008 again 21%, and then 2020 34.6%. But after 12 months, and this is the big reason why probably 95% of you should be not selling right now in any manner and not panicking. In 12 months, a 22.9% return, an 18% return, 18.2, a 45% return in 2008, and then 2009, and then a 59% return in 2020. Now, in this year, we don't know yet. So don't panic, because there's opportunities here. And that's what we're going to talk about here. But first of all, as if you know our firm, most of our clients are over 55, and definitely for the last 30 years. This is a great time for Roth conversions, because you're moving those positions, those stocks, over to, this is the way we should do it, move it over to your Roth IRAs. Not selling them, just moving the discounted stock down, because they're discounted 10 or 20% right now, for example. And not because the companies are not producing.
Right.
NVIDIA came out and blew out earnings again. They haven't missed an earnings. They've blown out earnings, but their stock's down 25%. Ridiculous. So you move that over to a Roth IRA. Yes, it's a taxable event, but now when this market takes off again, and it will, when it takes off again, that is when those returns are 100% tax-free.
Yeah, absolutely. Like you just said, if you have $20,000 in a stock and now it's worth $15,000 or $12,000, that's significant savings as far as taxes. Move it to the Roth. You know the company's going to be around in the next year, 10 years, and that just grows tax-free. There's a lot of things that we can be doing right now, which is good. Like you just said, Roth conversion is going to be a great one. There's also, you can do rebalancing, tax loss harvesting for some of those non-retirement accounts, right?
And now here's another thing too. Sorry, Tim. Here's another thing too, just popped in my head. Those of you that are retired and you don't like the volatility, maybe your broker dealer is just a little bit too aggressive. He's not really listening to you, or he doesn't call you. We've called all our clients, and it's just too aggressive.
Yeah.
There's some very specific index annuity products that have very high participation rates. Very high participation rates. I've been in this market over 32 years, and this has only happened twice. This is a great time to maybe consider that. Now, we only use A+ companies. That's a win-win. Okay. Now let's get back to the market. Short term. Let's look at your age and what you should be doing. Okay. If you're 20 or 30, 40 years old, what should you be doing?
Well, it's perfect time. There's dollar cost averaging. You know, if you're participating in a retirement plan, 401k at work, you should be looking at this as an opportunity that, man, you know, you loved Apple, NVIDIA, let's say the Magnificent Seven. You got most of these at a 25, 30% discount. We love buying things on sale. This is when you continue to buy. If you got extra money, if you want to contribute to an IRA or to a Roth, absolutely. You can't be fearful. At this point, you're buying something cheap, and you have the time. You have time on your side. You know, it's a little bit different as you're a little bit older and you retire. You know, retired. Yeah. But for young people, absolutely should be buying right now.
Yeah, and because you're not going to touch your IRA, you're not going to touch your 401k. So you're buying these stocks, like you said, on discount. Now, if you're 50, looking at retirement within the next 5 years, if you're retiring early, you need to be a little bit more cautious. Look at dividend stocks. Look at less volatile stocks. That's big in our model. If you're 55, 60, say 60 years old, and you're looking at retirement in the next year or two, or you're 65 plus or 60 and you retired, different story. Now, that's when we build a retirement income plan, a tax strategy investment plan, and a retirement plan. When we sit down with probably 90% of prospects, they don't have all three of those items. Sometimes they don't even have one. So that's what we do as a retirement advisory firm. We sit down with you and build out a retirement plan, build out an income plan, and build out a tax strategy plan. What that gives you is a sense of presence to know when the market does have times like this. Our phones are not blowing up. Our clients understand what's going on. Yeah, we've had a few phone calls about, is this an opportunity? Is this the right time? And it is for the right situation. So we'd love to sit down with you, go over some different suggestions and ideas for you. But this is short-term pain. This is not going to be a long-term pain. This is short-term pain for a long-term gain. This is an opportunity for most of you out there. So if you would like to sit down with us, look us up on the web at Burns Estate Planning and Wealth Advisors, or give us a call at 1-800-308-4416. 1-800-308-4416. We're in Louisiana, Alabama, and Florida. But in addition, because of the laws in the SEC, we have clients in 45 states. So we'd love to help you. And if you have any questions, give us a call. But I hope this helped today kind of ease your mind. It's going to be okay. This is short-term pain for long-term gain.